G'day traders, this is the FX Big Dog and welcome to this week's market update. If you have any questions regarding this review, please email me at analysis@infinitumfx.com, or if you prefer to do a one-on-one private chat, you can go to our website and click onto the online support links. Please traders, go ahead and read this disclaimer on your own time. Go ahead and pause your video right now. Alright, let's get straight to the currencies, and I'm going to move to the euro. I'm going to go to the euro, and we're looking at the 240 time frame. You can see the market is bearish. We've got multiple down AB swings. Here is the intermediate swings, the latest intermediate swing, coming off the high at 37.87 and the low at 34.44. This is the latest down AB swing. We can see we have a trend line coming down here. The market has not reached the trend line, so we could still see some movement going up north. Hopefully the 618 pounds managed to hold it closed at that area. But remember traders, what would be good with a strong bullish recovery after that dip in the US session on Thursday. In fact, it was not the US session, it was the end of the US session on Thursday. With the market retracing back so strongly, it might be advised to wait for a bearish candle formation before trading it short. But we are bearish on the down AB swing, so we're bearish overall on the 240 euro. Going to the pound, you can see that the pound's also bearish. We've just come out of this bear flag setup right here, this consolidation that is broken out of, and we could see a retest of the 382 bounce, which is at the B low, or perhaps even go back as far as the 618 bounce, which is testing the backside of that bear flag. Now that's what we could probably have in the next couple of days, a retest. Hopefully it holds at the 382 bounce, and then we're chasing after, of course, the objection point, which is down here at 50.56. Don't forget traders, we still have not hit the D extension of the previous swing at 52.02. That is coming up just short of this D extension, or this objection point of this latest swing. The previous swing came off 60.69 and 55.34. That was the previous swing. You can see the market did pull back to the 50 and dipped down towards the objection point. Now that we've broken below the B low, we definitely are bearish. What's important is that we hold below 58.14. Alright, let's move on to the Canadian dollar. The Canadian dollar is just about breaking below the consolidation that has been in for quite a while. Now we're still overall bearish with the Canadian dollar. You can see it's been holding strong bearish, not strong bearish, but it's been holding bearish for a long time. In fact, it's gone sideways ever since. We try to break out the B low, never failed to break out below 1.0205, and then worked its way back into consolidation. We've been in an up and down trends inside the consolidation, but finally we start to break below that consolidation. Look at that. It is 1.0411. That is the key area right now. We need to keep below that. If the market keeps below that, we should be chasing after that 205 area, which is the B low of the intermediate swing. If it comes back above 411, then perhaps we're heading back up to the top of the range, which is at 745. We'll have to wait and see what the market does there, but those are the areas that we'll be looking out for. Of course, making sure that we stay below 411 to continue bearish. If we trade above 411, then perhaps we're getting back in the range and we're going back to the top of the range, which is at 745. Let's go to the Aussie dollar. The Aussie dollar is showing like the Canadian, except in the opposite direction. The Canadian is showing that it's breaking out of consolidation, out of a range. But look at the Australian dollar. The Australian dollar is getting back into the range. Now, what's important with the Australian dollar is that we stay below 90.35. It's not too far off from that level. If we take out 90.35, we need a clear break above that to make sure that we are trading above that area. While it's trading above that area, we of course will be looking bullish. But remember, this could also be the retest of the 618 bounce of this down intermediate swing. So we have broken below this counter trend line, but we have not taken out this low here at 87.87. That low is critical because, as you can see, this short-term swing right here is still bullish. We're moving up from this low to that high. We are still bullish on the short-term swings, and if we go ahead and put in some fib levels on this, you'll notice the market pulled back to a 618 pounds and then started heading up north. Now, if it continues to head up north, we're chasing after 1991. So let's make sure that we've broken above a clean break above 90.35. If we have a clean break above 90.35, of course the bulls are taking control of this retracement. I call it retracement because we're still bearish on the intermediate swing. So overall, on the medium outlook, we are still bearish, although the retracement is still holding because we have not taken out the low at 87.87. Now I'm going to go ahead and put in that level there so I can remember that next time we look at the charts. Alright, let's move on to the Euro 240. And, oh, my apologies, we actually have spoken about the Euro. We've spoken about the pound, the New Zealand dollar. There we go. Let's go to the New Zealand dollar. Now, what's key with the New Zealand dollar is it's broken out of that range. It looks like it wants to come back inside the range, but what's holding is this counter trend line. We have not yet taken out this low at 68.99. We still have not taken out that low. So, yes, that is a critical low that we need to take out. But the market is, of course, trading below the trend line, below the counter trend line. If this last line of defense, which I call it the last line because if it does not hold, we'll be taking out these highs here at 70.81 and then chasing off this 71.50. So the last line of defense, I would say, is this area right here, which is the backside of the trend line, giving us the goodbye kiss at 70.30. 70.30. If it takes that out, we're definitely heading towards the high, and it'll take out the high at 70.81. And then, of course, we're back inside that range, which means that we could possibly even see the high at 7,300 being once again tested. Alright, let's go to the, I think we've done the Canadian. Yes, we have. And let's go to the Swiss franc, and then we'll move to the JPY. The Swiss franc is, sorry, the JPY, not the Swiss franc, but the JPY is in an up AB boundary. We did take out that 91.27 area, which was key. Now, with that being taken out, we're looking for up AB swings. So we could see the retracement to retest, of course, 91.27. Retest that area and perhaps move down a little bit deeper to around about 90.80. Now, if we get a slow pullback, a slow correction, we could see the 382 bounce and this upward trend line meet at the same area, giving us good convergence and perhaps some buying pressures or buying demand at least. And if we get buying demand at those areas right there, the 382 bounce and the trend line, then we're certainly going to look for maybe a additional confirmation of candle formation. If we get a bullish candle formation, that will definitely inspire some bulls to take control of the market and start heading north. So right now, looking for a retracement on the JPY. Let's move to the Swiss franc. The Swiss franc is bullish like we saw with the euro. Well, bullish. Sorry, the euro was bearish, but the Swiss franc is bullish. We had a strong pullback. Strong pullback. A lot of traders will be very much concerned with this, but remember, we're still trading in the buy zone of this trend line. And we've pulled back to the 618 bounce of this up AB swing, so we need to stay faithful to the swings. But what you could perhaps do is move down to a lower time frame and wait for any bullish environment on the smaller time frame, and once we get into the bullish environment on the smaller time frames, perhaps then we know that we're out of the retracement on this 240. So we are on up AB boundary coming off 1.0646 and the high at 1.0897. So we are on up AB boundary and expect the market to go and take out the high here once again, trade above this high and charge chasing after the objection point, which is all the way up here at 1.1053. Alright traders, that pretty much wraps it up for this evening. I trust that the information discussed in this lesson helps you become a better trader and helps you make better informed decisions in this market. This is the FX Big Dog wishing you joy, peace and successful trading.